Hello, and welcome to the Consistent Profits Podcast, brought to you by Inside Out Trading and Brian McAvoy, where the focus is on consistency. Because when you have the consistent part down, profits become easy. Well, welcome everybody to the Consistent Profits Podcast. It's brought to you by Inside Out Trading and Brian McAvoy. That would be me. Today, I'm excited to be interviewing Tony Greer of TG Macro, and he's just kind of a pretty cool guy, pretty sharp. You can see his cool office that he's got, his trading room that he's working in there. It's got all kinds of stuff going on. Tony, how you doing today, man? Thanks for taking time for this.
Not at all. I'm doing great. I'm enjoying the markets, and yeah, man, I'm pretty comfortable here at the TG Macro HQ.
There we go. There we go. So when we first connected here a minute ago, you're looking at a big spike. What you got going on?
Yeah, well, I'm actually kind of trading the semiconductor space at the moment, and in Nvidia and stuff like that. So, this is just a random uranium chart that is also up there, but I'm kind of just keeping an eye on some of the stuff that I'm in right now.
Gotcha. Well, let's see. It's been probably almost a year since we had you on the show.
Yeah, at least, right? It's been a while.
Yeah. I think yours was episode 30, and we're rolling up on, we're in the mid 60s right now. So yeah, it's been a spell.
Very cool. Congratulations. It's a good run.
Yeah, thanks, man. Yeah, trying to stay after it. It's an interesting ride, but I get to talk to cool people like you, so it works out.
All right, that's cool. Hopefully we can help.
Yeah. Well, just so for those of you, for our listeners who aren't familiar with you, give us a quick background on what you trade and what you do, and what a little bit on TG Macro.
Yeah, sure. So I'll kind of give you the encapsulated bio. I spent the first 10 years of my career as a commodity trader, the next 10 years of my career as a equity salesman, and morphed that into starting my own company, which is based on a newsletter publication, as I've been writing about markets since I was a commodity trader, and then kind of formalized an email that I wrote to people as a sales trader in equities, and launched my own publication called The Morning Navigator on the day before election day in 2016, with the bet on that Trump was going to win the election and the world was going to go batshit crazy, and here we are. So I guess I'm 7 volumes into writing the Navigator. The business is growing, knock on wood, and I keep a live real-time P&L of the positions that I'm trading in the Navigator, and kind of people appreciate that and appreciate, time stamping yourself to risk and managing it right in front of them. And so that's the kind of lessons that I'm trying to teach in the newsletter. And like I said, business is good so far. And I spend the most of the day sitting here staring at the screens, trading the markets, to be quite honest with you.
Hey, there you go.
Yeah.
There you go. If it's fun, it's a good way to spend the day, right?
It can be fun. It can be agony. It can be, it's always a little bit of something that's exciting. That's for sure.
Oh yeah. Well, very cool. Well, yeah, and thanks for catching us up. Like I said, we got some listeners. We've seen you when you were on before. Others, you're new to. So now, as far as you said first 10 years of commodity trading, and so you still trade commodities, though, right?
Yeah, I'm mostly an equity trader now, to be quite honest with you. I mean, I trade everything on most of my stuff on ETFs, and I do really, really love the stock market. It's a little bit, while I do have commodity positions, it's not like commodity trading like I did when I was at Goldman Sachs running the Goldman Sachs Commodities Index, for example, where you're in and out of 22 commodities and 22 commodity spreads, and that's real active commodity trading to me. So yeah, I speculate in commodities, but most actively trade stocks, if that's fair.
Yeah, fair enough. Well, so I got to ask though, why the preference for stocks, especially if you had some years, obviously successful trading in the commodities? Well, I switched to stocks, and I asked. It's a little bit of a loaded question. I'll tell you that right up front. But I want to get your perspective on the two instrument groups to trade.
Yeah, I'm more interested in kind of investing in commodities kind of thing where, if I see gold, where you like gold and everybody's got a chunk of gold on in some way, shape, or form, and I kind of hold that. And on occasion I'm into the oil trade, which, when there's something really good going on in oil and you can jump in and it's going to move more than, a couple of bucks a day when there's a real event going on, I'll trade that. But the reality is that the markets that provide the most liquidity and volatility for me and really, really a high level of comfort zone is the stock market, as years have gone on. I mean, I manage risk in the commodity space, and like I said, I'll still put positions on that are commodity related. And I like to trade things with commodity tailwinds, when, you can pick a stock like a miner that's going to probably trade with a commodity, or a gold or an E&P company or something like that that's likely to trade with oil and gas. There's always edges to exploit there. I just love stocks.
Huh. Well, so like I told you, it's a little bit of a loaded question because I know that there are some people that their view of the stock market is that it's really almost a confidence game with stocks because a stock it just really is only worth what level of confidence people have in it, whereas other instruments and such like commodities, at least there's some real world supply and demand that influences it greatly, or like real estate investing and stuff like that. But I mean with stocks, like we saw back in 2008, where there were super huge companies that literally went to zero like almost overnight. So what is it you like about stocks with that in that kind of a context?
I love the S&P bull market that we're in. And I love it because it's kind of like an observable bull market that we've been in for my entire life, and I've been in touch with markets since I was really little. My dad was a trader and I knew what bids and offers were by the time I was in junior high. So I guess it's that, I can point to the fact, you can say that the stock market is only, worth what people are be willing to pay for it. And I'd argue that they're willing to pay consecutively more every single year for it. So that's something that I really like to be a part of, and that's something, there's of course there's downdrafts and this and that, but the average rate of return in equities is like 11% over the last like 30 years. So, if you want to jump in and try to be short that at the precise moment that there's a crash or something, then that's probably a good strategy if you're that good at it. But for the most part, the S&P, I don't understand people that want to be short the S&P. It's built to win, right? It's built to have the biggest, strongest, and most profitable stocks in it and kick out the lesser of those. So just with that setup right there, people that bet against it are starting from a losing position.
Okay, yeah, fair enough. Yeah,
Yeah,
and that is a good perspective, especially with the S&P 500, because yeah, it is by design meant to be strong.
right. I feel like that's yeah, that's they kind of hand you that little advantage when you step into the S&P trading ring. Like, hey guys, this is built to go up.
Yeah,
Just so you know, over the last 30 years, it only ever goes up, right? Like, so let's just start you off with a little bit. Let's start you off with a little head start there. So that's it. That
yeah,
that that's very helpful for me. I like knowing that it goes up all the time. It's a
yeah.
comfortable ring to be in. Yeah.
Yeah, fair enough. Fair enough. And that does make more sense than just trading individual stocks. That may or may not be influenced by various factors. So yeah, all right, that definitely has some good merit to it. Now you mentioned that you started your thing right before the elections in 2016. So the last 4 years, yeah, like you noted, yeah, things have been a little crazy, and here we are in an election year again. So what's your position on things now? What do you foresee as far as like the rest of this year and the years to come?
Oh my God. I think first of all, there's a non-zero potential chance that Trump wins the 2020 election before we get to 2024, right? There's so much. I mean, I doubt that they'll overturn the result, but we're learning about so much fraud that took place now, and we're learning about oh my God, the cover up of the Hunter Biden laptop and the 51 heads of state. So like, I'm literally poised for anything, right? going into this election year. I'm poised for, a Trump landslide. I'm poised for another stolen election. I'm poised for I'm poised for another pandemic, another bioweapon. God, it could be anything, right? And that's not conspiratorial. If we were talking last year, some of that might have been a little conspiratorial, like a little. Um,
Uh,
but I think by now, I don't think it is. So, you know, I don't know. I don't want to get too far off of the point of the question, but I think that it's really, really fascinating that the market might be pricing in a little bit of a Trump victory with the way that it won't go down.
mhm.
Maybe it's pricing in the behavior that it had when he was in office. And I'm not necessarily saying that that made him a good president or not, but he certainly was good for the markets, right? He like
Yeah.
the idea of cutting regulation and keeping taxes to a sort of minimum and still spending your freaking lips off. You mean that's bullish for stocks, And so maybe the market is anticipating a little bit of that. But I love the way that it all plays into the story and into the narrative. I really do.
Oh yeah. Yeah, and well, as far as running off the beaten path or away from the question, it's like no, it actually I consider it a very valid question
Yeah.
because depending on the general market sentiment and expectation of what's going to happen in November, every time the elections roll around, this is a valid question. It's just gotten more interesting over the last couple of elections.
Yeah, totally. It really has, and you can't even make a case that Biden's necessarily been bad for the market, right? I mean, the market's been up during the Biden administration. If you're a bull, you're happy as a pig in shit. You've got the AI craze going on in the background. You've got, inflation off of the highs. You've got the Fed probably not under a lot of pressure to do much if I'm reading it right. Like, right, it's not like the Fed's under pressure to cut rates or they're under pressure to raise rate. There, the Fed's kind of like we're kind of fielding the data and everything seems cool. Bond market looks okay. Yield curve is not dramatically changing. Like we're in a comfort zone. We're in a very much a Goldilocks period of the treasury market for stocks. So that's one
Right.
of the reasons that I can stay bullish.
Now, do you see that continuing through the elections, or do you see, as we get closer and closer, the likelihood of something really rocking the boat happening?
Man, yeah, I do. Like you never know. You can't predict an event, but it certainly seems like the heat is going to get turned up on the American landscape again heading into the election. And I don't want this to be a political podcast because it's about markets and stuff, and I don't want to go there unless you
Right.
want to. But yeah, I do. I will stick with that view that I think that this can continue,
Mhm.
especially because I feel like rates are really range bound, and I feel like the technology tailwinds are really strong. So I don't, I remember the dot-com bubble, and one of the things that I remember about it was, you heard about all of these things coming into play in 95, 96.
Yeah.
97, right? Like new music, new music players, new hardware, new iPhone, like all this stuff, whatever it was, like that stuff started playing out. And it wasn't until everybody was using it that we found the top.
Yeah.
You know what I mean? Like, and so that's why I don't feel like AI, like people want to say it's priced into the market, and I'll say maybe it's priced into some stock prices, but I don't think that it's priced into the narrative yet, where like one AI collaboration headline from AI stocks going up 50% again,
Right.
from last sale. So like kind of that's how it was during the dot-com bubble. And I feel like that's the way now where like I don't think anybody, I mean, I won't say anybody, but market people seem like they're in a little bit in touch with like AI and chat GPT and some of the corporate world, but I don't think any of the retail world is really very much in touch with it. And so until I see it become way more ubiquitous, like I can stay with this narrative of those stocks going up and to the right for some period of time now. I mean, that blockbuster Nvidia earnings that set the thing off was, only a year ago now, right? I mean, we're only not even a year into that earnings period where they really separated themselves from the pack. And so, I mean, I don't know why that has to stop within, just 1 year's period of time when we've seen tech, go on a run for 4 or 5 years at a time before it runs into bubble territory anyway. So that's just kind of my take.
Oh yeah, no, and that's good perspective. I definitely appreciate it. The Well, speaking of landscapes and that kind of stuff, whenever I see something like what we've witnessed a few times over the years, I mean, you went back to like the dot-com bubble, and um, I mean that's a good example. But there are certain times where, and I like to use the example of the product life cycle, where like if there's some revolutionary new product. I mean, my favorite example is like plastic 2 liter bottles. That was a disruptive thing because plastics all of a sudden were entering into a very large market sector, a lot of money there, new technology that could be applied in a lot of different places. And it was really cool because I actually, when I got out of school, I went to work for one of the companies that was making plastic bottles. And I got in there when there had already, they've been around for a little bit. There were still a lot of new players entering the space. Still a little bit of the Wild West. But over the first 6 months I was with the company, it was cool because I got to sit in on the monthly plant manager meetings for the company I was with. And we're watching, margins kind of erode, a lot of players dropping out, some buyouts going on, and then some consolidation going on, and looking at pricing changes, margin changes, that kind of stuff. And for the first time, and we'd gone along for a while, and we hit this one month, and we actually had a plant losing money, which was like crazy because when I first started with the company, it's like, man, all the plants are just making money hand over fist, make all the mistakes you want, it didn't matter.
Yeah.
And so I'm sitting there at this one meeting, and it's like, man, it's like the plants are struggling now. And I remember when we took a break for lunch, it's like I remember this. And I went back to my office, and I still happen to have one of my binders from school. And we had this one instructor who'd worked out in the real world. This is mechanical engineering, but he'd worked out in the real world for a while. And this one day he talked about the product life cycle, and how the nature of a given industry or whatever, there's a cycle that it goes through, and there are certain things and events and circumstances that come up as you go through that cycle. And so I found the binder, and I'm flipping through it, and it's like, that's the page, that's the one page, and I'm looking at it, and it's like, okay, here's all the stuff I've been hearing. We've been riding up the cycle. Margins keep going up and volumes keep going up, and hey, we're hitting the top of the cycle, and now margins are getting thin, and players dropping out, and I'm like, this is exactly where we're at. And I grab my boss, and I'm like, check this out, and I show him, and it's like, no kidding, that's exactly where we're at. And so for the next 6 months, we got to watch the rest of the curve play out, and it was just cool as crap. And so now, anytime I see something like what we saw with the dot-com back in the 90s and stuff, and there's software companies, and everybody's entering a space, and a lot of companies, it's like our business plan is, grow the company, get bought by Microsoft in 2 years and stuff like that. And it was just, crazy times, but then it settled down, and the consolidation, all that kind of stuff. So I got to watch the cycle through that. And now we're starting to see the same thing with AI. It's like, yeah, we've got this disruptive technology, and there's going to be a lot of, wild stuff going on. It's like, cool. I'm just waiting to go ahead and watch the curve play out again, because we watched it with other technologies along the way, and it's really cool. But the nice thing about it is it kind of gives you some insights as far as what's going to happen with the markets in general, and the way the market behaves in response to new things coming along.
Maybe.
And so what you were just talking about, that's like, yeah, this is very cool, especially with AI, because it's one where it's still in its early stages, but it's still showing some of the similar traits, and it's just really cool. Well, it's kind of like when the expert advisors and bots and algorithmic trading came out. Those similar curve. Got to watch it happen through that, and now with AI, it's a new technology, but this is one that's going to be affecting everything, not just certain areas. It's like this is going to be hitting everywhere. So yeah, how it affects the markets and trading as individuals and that kind of stuff. It's like, yeah, we got some potentially cool times ahead of us here.
Yeah, that's for sure.
So
That's for sure.
in addition to it being an election year, so yeah, we might have some crazy times over the next couple of years coming up, just because all these different like powerful influencing factors. So yeah,
Yeah, for sure. It is interesting time for the markets.
yeah. Well, now that said, with TG Macro, you're helping traders. Um, refresh my memory as far as what kind of services and products you guys provide there, and what you got on the horizon coming up. If you got any stuff, if you got any new things coming up, especially with like stuff we've been talking about, things potentially on the horizon.
Yeah, my main product, my business is really simple. I have a publication business and a consulting business. So my publication business is the Morning Navigator that I write 3 times a week, Monday, Wednesday, and Friday, and have a really great growing subscriber base to that. I charge $800 a year for the note, but I keep a running view matrix in the back where I timestamp my trade ideas and run an actual trade percentage point P&L. So people like that very much. And then the
Mhm.
consulting side of my business, I speak directly with home offices and portfolio managers and risk managers about the markets or their portfolio and things like that. So those are the two main revenue sides of the business. And I would say that's really what I'm focusing on. I'm about to start a podcast with a friend of mine, and I don't want to give it away yet, so we're gonna announce it next week, but I'm excited about that. And that's going to be a weekly publication, for at least a year. Like we're really going to sink our teeth into it and talk about markets and where the trades are. And he's got a really good following too, so I think that that'll be really exciting. And doing things like that. I'm going to be doing some more video where I do some more market briefings and things like that. So I'm trying to kind of expand, my kind of sales funnel and ways to be able to reach people for free to get them to be interested in subscribing to the note. So that's kind of how I'm set up right now.
Very cool. Very cool.
Yeah,
Well,
it's fun.
little side note, and I'll edit this out. Um, this conversation is probably going to be airing week after next anyway.
Oh, okay.
So you may
Oh,
have already done your announcement by the time this airs.
we're right there. We're gonna be right on. We're gonna be right on it because we're
Okay.
just gonna announce it with the first one when we publish it, and that's right around when we're gonna publish the first one. So I'm just gonna leave it out for now.
Okay. All right. Fair enough.
Yeah.
All right. Like I said, I'll edit this out. But
Yeah.
okay. Well, so cool that you got a new podcast going on. Now, is this going to be a weekly podcast, bi-monthly, or?
Yeah, we're every week we're going to go toe to toe about markets, and markets that we agree on and disagree on, and we have a big overlap in our following. So I think that'll be really, really cool to exploit. And we're going to have some really great guests on as well. So it's going to be a fun show. It'll be all about a really serious traders um podcast, and I think there's a niche for it out there. I really do.
Yeah, cool. Now, are you guys going to be largely speaking to, what's happening now in the markets, or is it going to be a blend of, what's happening now, but also some more evergreen kind of stuff?
We're going to talk about the markets and talk our book. I mean, I'm going to be talking about the views that I have and the positions that I have on that are, going well or not. And, about what Jared, we're very good about having opposing viewpoints and discussing it. Like
Cool.
we'll get on the phone. We've been able to get on the phone for years and be like, "What do you think of the S&P here?" And I'll be like, "I'm bullish." He'll say, "I'm bearish," and we'll go toe to toe and be like, "Why do you think that?" And what do you think about this? And so we have a really functioning mechanism of airing markets out. And I think that like turning that towards the public will be a really powerful thing, believe it or not.
Yeah.
Because
Yeah.
yeah, because we get it sorted out, and we'll arrive at a conclusion, and God forbid our views line up. I mean, when our views line up, I triple my bets. You, you know,
I was just getting ready to say, yeah,
yeah,
same thing. When you guys, if you're starting off opposing, but if you're coming to the same conclusion, it's like, yeah, that's probably going to be pretty strong.
yeah. So we have some. So hopefully, there'll be some alchemy like that. But otherwise, I really enjoy. Um, I really do enjoy writing the newsletter and basically publishing 3 times a week. I've got a really really virile subscriber base, like the most. Yep, sounds good. Um, the last product that I wanted to mention that I started about a year and a half ago was the TG Macro Slack channel, which
Right.
is where I have that is the next level of subscriber base up from the newsletter. And I have about 150 people in the Slack channel talking about things across 7 market topic channels, and we go at it all day and all night. So
Okay.
it's really an excellent product. People get a really good view of, I mean, people have told me that I've both made them and saved them a lot of money by like narrating my intraday views in markets and things like that. So it's been really fulfilling. And that community just gets tighter and tighter and tighter because I send the note out every day. And then we basically, we talk about things in the Slack all day long. And so I wanted to give people more access to me and more access to my ideas. And I wanted to get access to a bigger audience.
Yeah.
And so I've got some really, really sharp traders in there and portfolio managers and things like that. So that's the whole business right there. That takes up my whole day, from managing that to writing the newsletter and talking to clients. That's about all I got.
Yeah, very good. Now, as far as the trades that you guys are going to be talking about, you're sticking pretty much with intraday trading, right? Not swing trading
No,
or a little.
no, I mean, I would say I'm a position trader where, yeah, I may get stopped out in the same day that I put something on. I mean, you never know, but I'm usually have a time frame that goes from like 2 days to 2 weeks. And if I get something
Oh,
right and time it right, I've had positions on for 5 years where I just never get stopped out. And so kind of just run with the trend, and that turns into, a little bit more of a longer term trade slash investment. But I'm a big proponent of trailing stop losses. And every once in a while you catch a live one and you catch a trend that just keeps going, and you can raise your stop loss all you want, and the trend stays your friend. And those are the trades that ultimately you're hunting down, right?
yeah.
Is the ones that look right for 2 weeks and they wind up being right for 2 years. Those are the ones that wind up making a whole shit ton of money for you. So those are the ones that you're kind of actively hunting down and trying to keep the holes in the boat from springing leaks and stuff like that.
Yeah, there you go.
Yeah.
Cool.
Yeah.
So you usually working on like the hourly chart, daily chart, weeklies, or what?
I look at everything, man. I mean, I had the same six 30-minute charts up in front of me that I've been looking at for 30 years now. Exactly the same setup. Great way to follow the markets is to have, the asset classes laid out right in front of you on short-term charts. And this way you can see all the price movements that are relative with each other, and kind of, as soon as I flip my screens on in the morning and I see these six charts, I know exactly what's going on in the world. So that's really, really helpful. So in terms of charting, I mean, I'm also looking at longer term trends. I like looking at 1 to 5 year daily charts. I'm a big moving average surfer and things like that. I'll try to find things in a bull trend and get in on the moving averages and kind of try to surf them higher. Nothing fancy, just blocking and tackling, tactical trading.
There you go.
Yeah.
Cool.
Yeah.
Cool. Well, for everybody that's listening, if you like what Tony's got to share here, definitely make sure you swing by tgmicro.com, right?
Yep.
And go ahead and engage him. If like I said, if you're looking for good help, you want somebody who's obviously a cool guy, obviously sharp, doing well with it, and wants to be helpful to other people. Yeah, definitely. Don't just listen to this and say, yeah, that was cool, and then let it pass without doing anything. Just go ahead and connect with Tony. And so your site, now you said you got your podcast coming up. And so, yeah, a lot of cool stuff going on. But yeah, I applaud you guys, everybody listening for, taking time out of your day to listen to the podcast and, become better traders, not just, chase strategies, but actually up your game. And yeah, Tony, again, thanks for taking time for this, man. It's been awesome. It's good to catch up with you again. Cool that you got good stuff going on, and cool to hear your perspectives. You're a little snarky about some things, which I totally like, and I'm the same way. So yeah,
Yeah.
very cool.
Yeah, man, we're having fun with it. I really appreciate it. I love being a return guest on here, Brian. So thanks for having me. And anytime you want me back on, I'd love to.
Yeah, very cool. Yeah, excellent. Well, we'll do that, and everybody, let's go ahead and wrap things up. If you enjoyed the podcast, make sure to subscribe, share it with your friends, and give us a like down below. And we'll see you on the next episode of the Consistent Profits Podcast. Cheers. Thank you for joining us today on the Consistent Profits Podcast, brought to you by Inside Out Trading. Make sure to swing by InsideOutTrading.com and pick up your free copy of Break the Cycle, 10 things you can do to stop reinforcing the past and get your trading on the right track. If you enjoyed the show, make sure to subscribe on your favorite channel, and we'll see you on the next episode. Cheers.